Good morning or good afternoon, ladies and gentlemen. My name is Selica Kavrakova. I hope you all hear me well. If not, please give me a sign. I'm heading the Eastern European Institutional Clients team of Raiffeisen Bank International and have the honor today to welcome you to our joint webinar with Elucidate on the new way of managing financial crime risk and how you can make a use of machine learning to build a strong and transparent correspondent relationship. A few years ago, I could have not imagined that me being on the sell side will make an intro to a compliance-driven event. But as we all are aware, times have changed. In the background of the 4th, 5th, 6th EU AML directives, all the leaks in the media and penalties imposed to banks globally. So can a bank and its compliance be ever ahead of events? Correspondent banking, being the most sensitive and vulnerable to AML risks in the financial industry, is squeezed in the dilemma, and this is particularly valid for banks in emerging markets, between the necessity to adhere to EU standards, pushed also by Western correspondents, and at the same time having, to a certain extent, less developed local legal and compliance framework. So I'm afraid you can never be 100% ahead of events, but we can help you to come closer. It's a fact that it does not matter how big your client base is. You need automated solutions for transaction monitoring and screening of your portfolio if you wish to diminish the risk of losing your correspondent banks and getting a penalty, thus assuring a safe growth for yourself and your partners. Having said this, today we will present you a new way how to manage financial crime risk. Together with me are my colleagues from Elucidate and RBI, whom I will present to you shortly. After me, the first speaker is Sihem. Sihem has started her career in political and security risks in London and has gathered nearly a decade of experience working in compliance and financial crime risk management across Europe. During her time in the industry, she has held positions at leading financial institutions and consultancy companies, including management roles at Citigroup, Ernst & Young, and the Capital Markets Company before joining Elucidate, where she is the Chief Product Officer. In addition to her work in the industry, Sihem graduated from the University of Montreal with a bachelor's in political science and a master's in comparative politics from the London School of Economics. Next to Sihem, we have on board Shilps. Shilpika is a Guinness record-breaking advocate for climate justice, an early pioneer of fintech SaaS products, and a serial builder of sales businesses for global investment banks. In her professional career spanning from over 4 continents over 15 years, she has built payment automation systems for European FIs, scaled institutional sales for Deutsche Bank, and most recently worked in early-stage venture investing. At Elucidate, she is excited to be building out the strategic partnership team. Shilpika holds a bachelor's degree in computer science and engineering and an MBA from IECE Business School in Barcelona. I'm honored to present also the RBI team. With me on board is Ursolia Mikushka. Ursolia has been working in the compliance area of various financial institutions for the last 1.5 decades, specializing in AML, markets compliance, and correspondent banking areas. After having worked for KBC Group and managing AML function of a subsidiary of Austrian headquartered Erste Bank, where she was responsible for the establishment of the compliance function, she joined the RBI Group 3 years ago. In her current role, she's overseeing institutional clientele in CE and CIS area and leading our compliance portfolio review project. Last but not least, Stefan Wichtel is with us today. Stefan started his career 2011 in the area of cash management, changed at the end of 2014 to join compliance in the area of AML for FI. He executed a couple of important projects with regards to transaction monitoring. Later, he switched back to business to build up the first line of defense compliance department to determine the compliance risk appetite of the institutional client side and take over non-sales related compliance tasks. So wishing you a lot of interesting insights from our panelists. I'm asking you here if you have any questions, kindly invite you to the topics which we present today. Kindly ask you to post them in our Q&A section, which you should see on your screen. We'll address all the questions at the end of our session. Thank you, and I give the floor to Sihem.
Thank you, Elisa, for the introduction, and thank you to Raiffeisen for hosting this webinar. We're super excited to partner with you. and advocate for using data for managing financial crime risk and building stronger and transparent relationships. So to begin with, as you mentioned, I'm here today with my colleague Shilpika, and Shilps, off you go, and I'll pick up.
Thank you, Litsa, and thank you, Siham. Hi, everyone. I'm Shilpika, the VP of Strategic Partnerships at Elucidate. Thank you all again for joining today, and we're delighted to be here. As Siham mentioned, Siham led compliance teams in her previous roles, and in my previous role, I ran institutional client businesses within capital markets. So we genuinely understand some of the inherent challenges banks face between growth and risk tolerance. And my hope for us today is that you can walk away from this webinar knowing how Elucidate addresses these challenges and how you can use data to manage financial crime risk and build even stronger relationships. But first, I want to tell you a little bit about Elucidate, our company. We really pride ourselves on being a super diverse team of 24. We represent over 21 nationalities. We're based in Europe, but with a really global presence. And together, our team has over 200 years of finance and fintech experience across a variety of world-class institutions. We come from global investment banks, regulatory bodies, international consulting firms, government institutions, fintechs, and lots of tech companies. And within those institutions, many of us have sat within business, compliance, and tech roles, and we understand the challenges around measuring fin crime risk, and hence we absolutely believe it's time for a change. That change for us is Elucidate. Elucidate offers the industry's first fin crime ratings platform, the Elucidate Fin Crime Index, or the EFI, as we'll refer to in the presentation today. The EFI is also the industry's only regulated benchmark for fin crime authorized by both the BaFin and the ESMA. So essentially, the EFI is our core intelligence engine, which uses a combination of machine learning and data analytics to both score and price risk, hence providing a comparable and comprehensive view of a bank's own risk, as well as that of its counterparties. It also automates multiple reporting and monitoring requirements that can help banks, financial institutions build a continuous and a trustworthy dialogue with your regulators and your counterparties. To illustrate this point a little bit more intuitively, I like to use the analogy of credit markets. Most of us in this room are familiar with credit ratings for debt, for example, Moody's. These ratings provide an industry-wide benchmark of what good, better, and best looks like. Before Elucidate, there was no comparable benchmark to visualize or score risk in the financial crime world. So the questions that come up with that situation is, how do I know as a financial institution whether my fin crime risk controls are adequate? How do I compare them to those of other respondents or even my correspondents? How do I show the regulator that I have effective governance in place? And EFI is designed to answer all of these questions and many more, as Siham will shortly illustrate.
Thanks, Shilpika. So one interesting aspect of what we do is to understand why we do what we do, right? So we just wanted to illustrate kind of the context in which we are at the moment. So, I mean, it's no surprise to the audience, and the reason you're here is because obviously managing this risk is critical. What we have seen is ongoing scandals. No later than last week, we had the FinCEN files, for example, and that is accompanied by regulatory penalties that are ever increasing. We're seeing that banks are spending an enormous amount on managing financial crime risk. The head of our advisory board was the COO of Bank of America for EMEA, and she was telling us that easily, over 60% of her time was spent on matters of financial crime compliance. And so, this is really an aspect that is critical for banks, but that is still a challenge. And what we see is that for institutions, specifically institutions operating in perhaps more localized markets, or more kind of marginal jurisdictions, it becomes increasingly difficult to secure access to the global trade network and to secure it in a way that is predictable, sustainable, long-term, and safe. And that makes it challenging for those banks to secure products for their own customers and to operate. But what we've seen also is a push from global regulators to essentially encourage financial institutions to seek innovative solutions and to use technology, to use automation for the purpose of better managing this risk. And this is essentially what we do, and this is what we do with Haiphisen. So if you think about the challenges that are at the moment prevalent in the industry and the challenges that we're seeking to essentially overcome with our platform, I would point to three key barriers. So the first is about the amount of investments that we're making in financial crime risk management is essentially endless at this point. I mean, you saw in my previous slide that we're talking about amounts in trillions of dollars, and we've seen other statistics that said that banks on average were spending 3% of their annual revenues on managing financial crime risk. And so that's not negligible. However, there is limited ways to measure whether those investments are generating the returns in terms of effectiveness of financial crime risk controls. And so it's not clear that what we're doing at the moment is necessarily working. And so there needs to be a focus on outputs and on results. The second key barrier is that we have institutions sitting on large amounts of data, but the extent to which that data is being used for the purpose of managing financial crime risk is actually relatively limited. And that is actually a factor contributing to essentially limiting the extent to which we're able to measure the returns on the investments that are made. And last, but definitely not least, what we have seen is essentially global institutions engaging in de-risking activity, exiting markets or relationships, and that might reduce the risk for that institution alone, but overall, holistically speaking, it increases the risk of financial crime occurring. Essentially, if you remove access to the legitimate global trade network, it's not like that activity stops. It's just that that activity is rerouted through less transparent channels that are harder to control. And those are essentially things that have been confirmed and studied by organizations such as the World Bank. So we're talking about a global issue here. And we all want financial crime to stop. We all want criminals to be blocked from accessing the financial markets, but that's definitely something that's not easy to do. So what we've built is the EFI. And the purpose of the EFI is to essentially provide a level of clarity and objectivity to the management of financial crime risk. And we have built this platform so that it is suitable for use for both a business person, a first line person looking at managing their client relationships, but also to be used by a compliance officer who's looking to advise the business on the level of risks that can be tolerated by the institution. And this is essentially why we have today with us partners from both the business and compliance at Haiphisen Bank International, because they do collaborate together and work with the EFI to essentially assess that risk. And what it does is that it shifts the conversation from essentially discussing whether there is a risk to discussing what you're going to do about the risk. And so it's very much focused on action rather than going back and forth about various levels of opinions depending on the perspectives of the person looking at a counterpart. So what you can see here is an example of a report. This is obviously a mock example of a report that we produce, but there's a lot more to our platform. But just to walk you through this quickly, in essence, what you can see is for 9 various themes, we will assess the risk level associated with a given institution. We will benchmark that against what we see elsewhere in the industry. And we will also provide you with a number of key risk indicators and drivers for the risk levels that we've essentially analyzed. So you get to see, for example, key risk indicators on downstream clearing activity, or on payments originating from or destined to offshore accounts. Or, for example, you can see what kind of customers are subject to enhanced due diligence in this institution. But what you also get to do in the platform is to essentially address these issues. So focus on actions. And so we have also a tool, which we call the remediation tool, which enables you to clearly set actions against each of these risk drivers as to what you're going to do in order to essentially get the risk levels within risk tolerance. And you can then share that information between counterparties. So either between different counterparties of the same bank or between yourself and your correspondent. And that way, you're really making sure that you're on the same page and continuously communicating and being transparent on not only what your risk levels are, but also what you're doing about it. And so what we do is we run an assessment on a monthly basis. And in addition to providing you with that level of transparency, what the platform enables you to do is as a manager, as a decision maker, it enables you to see what the effects of your decisions are on a monthly basis. And it enables you to continuously assess whether the actions that you're taking are having the desired outcomes. So going back to this point about investing, but not being able to assess the returns on these investments, the platform solves that problem because you're essentially able to every month see how these investments are actually having an effect on your risk profile. And by providing transparency to your counterparts, you're also preventing a de-risking situation. So how does it work? So we always say the answer is in the data. And I think that's more or less clear if we think about, for example, some of the scandals that have come up in the last 2-3 years. I mean, we're talking about data leaks that lead to huge scandals for institutions, which confirms our assertion that if you look at the data, you'll have the answers. So essentially what our platform does is that it digests various sources and types of data. We start from the classic Wolfsburg due diligence questionnaire, and we do that because it's an industry standard document and it provides you with a cookie cutter framework for all of the essential components of an entire financial crime framework globally. Then we supplement this with essentially user data. So essentially our platform enables you as a user to really fully utilize your data for the purpose of managing this risk, which also solves this problem of having all of this data untapped for the purpose of essentially countering financial crime. We match that with data we essentially extract from the public domain and our proprietary data set. And our proprietary data set adds a lot of value in that that's what enables us to benchmark you against peers, but it's also what enables you to apply learnings from other institutions to you. So if we see a risk typology or trend happening somewhere else, we're able to look for that trend within your institution. So you essentially benefit from the knowledge that we acquire from the industry as a whole, because our model is continuously learning, and so are we. So what we do is we take this data and we apply over 1,000 discrete tests to that data, and that goes through our model. And our model is a hybrid of machine learning and expert-driven modeling. And the reason for that is, whilst we talk about financial crime as a matter of risk management, and it is, we also acknowledge that there is a question here of regulatory compliance. And so what we've done is we've taken our model and we've incorporated essentially regulatory requirements coming from key regulators in the world, so in Europe, in the United States, in Australia, for example, or in the UK. And we've essentially made sure that our model accounts for these guidelines, in addition to using data to drive the model. And then what we produce is 9 scores around intuitive themes for anyone that is looking to manage this risk. So for example, here we have bribery and corruption, or the risk associated with your customer portfolio, the risk associated with the products and channels that are offered, or the transactional activity. And in that way, while our model is regulated, and our model is what it is regulated by the BaFin after all, because we provide you with the scores around these 9 themes, you get to set detailed risk tolerance levels around those for yourself and for your counterparties. And you can have very clear discussions with, for example, your correspondent around what is an acceptable risk level for them. And therefore you can monitor that you're within that risk tolerance on an ongoing basis, which essentially makes the conversation a lot more transparent and a lot easier to navigate. So I'm going to hand over again to Shilpika, now that I've explained how the product works, to talk about how the product is being used.
Thank you, Siham. As Siham outlined, across the industry, our clients use EFI for a variety of reasons. Perhaps they are a global correspondent bank looking to assure their current risk assessment processes. So, for example, continuous risk assessment of counterparties, create better transparency and dialogue with regulators, or even to implement differential pricing according to risk tolerances. Or perhaps they're a respondent bank looking for an easy to implement solution to automate their risk assessment and to position themselves more competitively for counterparty or correspondent relationships. Within financial institutions, as Siham said earlier, business and compliance often have different but very complementary motivations for using the EFI, which I can best illustrate using the example of our partner, Raiffeisen. And I know Team Raiffeisen is going to cover this in a broader detail later, but to go over quickly, the RBI uses the EFI to assess the institutions in its portfolio. From a business perspective, some of the benefits include strengthening of client relationships, prospecting new clients, expanding their current portfolio, strengthening correspondent relationships. And from a governance angle, the EFI offers the ability to better monitor affiliates, optimize board reporting, to monitor counterparty compliance programs on a continuous basis, and to automate financial institution enhanced due diligence. Now, could we go to the next slide, please, Siham? Thank you. Now, for some of you in the audience today, there are other ways in which you can also benefit from using the EFI. So, for example, some of the business benefits include you could use the EFI to facilitate new correspondent relationships, or as I highlighted earlier, to competitively position yourself in the market, to expand the variety of products you offer to your current clients. And from a governance angle, a lot of the respondents that we speak to find the automation of risk assessment really key to strengthening their regulatory relationships and to also monitor their compliance programs on a continuous basis. Now, the EFI is designed to deliver these benefits to you securely. Understandably, a lot of questions we get about the EFI address the provisioning of data and the importance of keeping it secure. And I'll be using this slide to address some of these questions. We often get asked, what data inputs does the EFI need? We designed the EFI keeping in mind that different institutions will have varying degrees of data availability and appetite for sharing. And the model is built to enhance your risk visualization based on the completeness of the data provided to it. As Siham said earlier, our model leverages a baseline combination of the Wolfsburg DDQ and public and proprietary data sources available in the public domain. Now, depending on the client's ability and desire to integrate their data in the model, we further supplement the disclosures included in the DDQ with institutional data, such as transactional data, customer data, sanction screening, et cetera, et cetera. This data can be integrated with the platform through an API, the preferred method, or through an upload directly into the platform in an anonymized format using a secure hash algorithm. I want to emphasize again here that as a regulated company dealing with regulated institutions like yourself, we're deeply committed to treating data with the utmost security and confidentiality. Some of the other questions that come up are, where is your data stored? We stored our data, or your data, our data, in a GDPR-compliant data processing facility in the EU in Frankfurt, in Germany. And this facility holds the best-in-class security certifications, for example, the ISO. What security protocols are in place? We adhere strictly to GDPR, and we are also working towards getting ISO certification, and we expect that to come through in a few months. We are a benchmark, and we share all security and data-related information publicly on our website as well. We'll be happy to share that link with you after this webinar. What are some of the encryptions in place? Also, all data stored in our databases is encrypted using a 256-bit advanced encryption standard. Will we ever share your data with third parties? You own your own data, and we will never share it with anyone without your consent.
Thank you, Chilps. So what do we want you to understand at the end of all of this? We want you to essentially understand that by using data to manage financial crime through the EFI, what we provide you with when you build your relationships with your counterparties is a common language to engage in discussions, about risks, and then to make decisions. So the focus of the discussion is about what we're going to do rather than what the status is. So that provides you with a more fair grounds on which to engage in discussions between your counterparties. In doing that, we also help you counter de-risking as a risk for yourself or for your counterparties by essentially providing you with a fact-based view of risk, which essentially makes everything more predictable and provides for a more inclusive global trade network. And everybody wins from that because, as we've established earlier, essentially countering de-risking helps essentially reduce the risk holistically across the global market. The third thing to remember is that by using data really to manage financial crime risk, and by using machine learning, which continuously evolves, what we're all doing together is really raising the global standard when it comes to global financial crime prevention. It is a more accurate view of the risk, and essentially it makes everybody it makes everybody united in the global goals around countering financial crime. So essentially what we want you to walk away with is understanding that by providing you with standardized and transparent ratings as it relates to financial crime, what we're doing is we're changing the incentives, and we're incentivizing everyone to invest in the right places to prevent, detect, and report financial crime. So we would love to show you the platform in action. So Shilps and I and our team remains at your disposal to really walk you through all of the functionalities of the platform and how it works. And if you're interested in seeing the tool in action, please send us a message at partnerships@elucidate.co, or alternatively, you can go on our website, elucidate.co, and schedule the demo directly on our website. We will also be at Sibos next week, which is held virtually, and our team remains at your disposal to provide you with a demo during the Sibos week. So thank you, Shilpika. Thank you to the RBI team, and I hand over to you now.
Hello, thank you, Siham. Thank you, colleagues. Before getting into more details on the benefits of the Elucidate and RBI partnership, I would like to give a bit of a context to RBI's background, who we are and what we do. RBI Group is a Vienna-based banking group that is presented with its affiliate network in 14 countries within Europe.
In terms of our core business activities in the head office, RBI has an extensive correspondent banking portfolio. We are servicing financial institutions in more than 100 countries in the world. RBI is functioning as a bridge between East and West, linking various jurisdictions and businesses via our correspondent network. RBI's vision for 2025 is to become the most recommended financial services group. And we believe that the cooperation with Elucidate brings us one step forward in achieving this vision. But why did we decide to partner up with Elucidate? Correspondent banking, one of our core businesses, is a high-risk product, the risk management of which requires continuous development and advanced technical solutions. All institutions, RBI also, have to cope with the rapidly changing regulatory requirements and sanctions regimes, which mean constant series of implementations on the level of policies and IT systems. Banks face increasing enforcement and fines from the key regulatory bodies, both on the local and European level. In addition, in correspondent banking, the standards of the key financial market players are also forming high-level expectations and best practices towards other participants. Like, for instance, US banks encourage us on a daily basis to get better and better. And the banking world, as already mentioned by Elica, receives a lot of attention due to global AML cases that pop up time by time in the international press, such as the various leaks and laundromats. In addition to this complex environment, the diversity of our portfolio and network of affiliated banks puts RBI largely exposed to the challenges of different standards, legal and compliance frameworks. This is why we have been looking for new modern technology solutions to complement our existing control framework. We believe that by this partnership, RBI will manage and mitigate financial crime risk more efficiently. But what does this partnership mean in practice for us users? Via the Elucidate assessments, the benefit is that we gain high level of transparency in terms of the applied controls and framework of our counterparties. And why is transparency so important for us? Because via the assessment, it's clearly shown in the figures how do the controls and framework described in the KYC questionnaires actually work in practice. And in financial crime risk management, transparency is golden. Transparency builds business relationships. It gives comfort both to correspondent and respondent, since the risks are quantified, strengths and weaknesses are visible. Mitigating actions can be tailored to the specific findings to ensure safe business growth for both parties. I see as a big asset of the platform that the assessment and verification of risk is data-driven, thus fully objective and standard. In comparison with the current status quo, assessment does not depend on the fact if the compliance officer's presentation on the framework was good enough, or if all risk-relevant questions have been asked in the course of the due diligence call. The data shows it all. Automation of the data analysis is also an attribute that, in my opinion, is, or at least shall be, the new normal in the compliance processes. Thank you. I would hand over to Stefan.
Okay, so hello from my side. This is Stefan speaking. We switch on to the next slide. Yes, thank you. So how are we at RBI using the Elucidate Financial Crime Index, and how are creating added value. This is also applicable to you because you can add the value in the same way. On the one side, we use it, as Shoya already mentioned, we use it to get more transparency on the risks that we face with our correspondent banking activities and services that we offer to you. So it shows really different categories and different scores of the risks, and it determines the inherent compliance risks in a quantitative way, so that we can compare it with the industry median. So we have the possibility to see what is the average in each category and how are our respondents fitting into these industry medians. Based on the outcome, our intention is to start working together with all our respondents to further improve the compliance quality of your processes, of your policies, as well as your risk appetite in detail and in each specific area, depending on the outcome. We therefore have two reports that can be created by Elucidate. We have on the one side the portfolio assessment, and on the other side, the self-assessment. The portfolio assessment is an assessment which only refers to the transaction which are exchanged between our respondent partner and ourselves, so between RBI and you, for instance. The report provides information especially on the nested activity, on potential sanction violations, and the transaction exposure that we as RBI and you also as our respondent are exposed to. So there is no additional workload necessary from your side. There is no additional costs that occur for our respondent partners. The only thing that we need from you is the consent that we share the information with Elucidate. And we use this data to together work with you on improving the compliance quality and decreasing the inherent risks that we have in that kind of banking. The second part, or the broader assessment, is then the self-assessment. This makes it necessary that you exchange more data to Elucidate and contract directly with Elucidate. So in general, it also provides information about the governance policy, about your geographic footprint, the customer portfolio that you have, and the organizational reputation. So therefore, you need to partner with Elucidate directly, and this may incur costs. This will be especially used for long-term analysis, and you also profit because you exactly see where your risk areas are and how to mitigate risk areas which might be below the industry media. The second use case that we have identified in general is that we also take this as a group steering function. So this is also applicable for you in case you are a banking group. We will use it to give clear and provide clear KPIs to our subsidiaries. As we've mentioned before, we are present in 14 countries. So we see also within our Raiffeisen banking group which entity has which risks and how we can mitigate those risks, setting clear KPIs. And Elucidate can help us in this as they have the huge added value that they make a qualitative risk assessment and transform it into quantitative numbers in which we can provide the clear KPIs and can steer the group towards the inherent compliance risks. So I think in total, this was the way how we use Elucidate and how you can also use Elucidate, because always remember the report that you create together with Elucidate can be shown not only to us, but can be also used to show it to other clearing banks and partners, and show it as a proof and as an additional comforting factor that your policies, processes, and your compliance risk appetite is fully in line and better than average or on average, and that you have identified to mitigate risks in that area. Feel free to reach us after the webinar at the mentioned email addresses. And I think we are now open for a short Q&A session. May I hand over back to Lisa?
Thank you, Stefan and colleagues. We'll start now with our Q&A session. And I see already a couple of questions posted. Of course, we still have time. So if you guys have further questions, just post them in the Q&A section. I'm starting with the first question, which I think it's addressed to Elucidate. Can EFI be used to meet our requirements to provide an AML risk assessment to the regulator?
Yeah, so I can take this one. So it is possible, and we have users that use our AML risk assessment as their internal enterprise-wide risk assessment. What we've done in this case, and we can do again, is essentially to provide a cover letter to the assessment, to provide to your regulator to explain how it meets the risk assessment requirements in your jurisdiction. If you're based in Europe, we've done these gap analyses already, like I was saying earlier, when building our model, we've accounted for regulatory requirements. So this is definitely something that we can do. And in that sense, you get an automated enterprise risk assessment every month. And that's super helpful. So definitely that's a possibility.
Thank you. I grabbed the next question, which is also addressed to Elucidate. Where does the blockchain come into play?
So we use blockchain as a notary. In essence, what that means is that our use of blockchain is definitely not the coolest use of blockchain, but we use it to create an audit trail. We create a hash for the data that is used for the report, and then the report, and then a hash for these two things combined, so that we're able to always link these things together. And so when you get a report from us, it comes with a hash, and then you can validate that the right data was used to produce the right report using the blockchain as a notary.
Thank you. I think, Elucidate colleagues, you have another question addressed to you, and it's, could you please elaborate on your pricing?
Sure, I can take this. It's Shilpaka. So our pricing is very transparent. It's based on the level of reporting and sophistication that your institution needs and will benefit from. Very happy to talk bilaterally more about this post the webinar. And if you like, you can email me direct at partnerships@elucidate.co.
Thank you. The next one, just a second. Could you please explain how Elucidate's platform connects with Raiffeisen systems? What are the technical implications? This is addressed to my colleagues.
Hello, Orsoya is here. Basically, there are API possibilities, which is or can be like applied in two directions. For Raiffeisen, also to upload the data and also to download the potential reports. I think it's important when you subscribe to the platform that you basically establish a reoccurring automated data upload, since the most could be gained out of the system on via using the system on a monthly basis and uploading the data on the monthly basis.
Thank you. Thank you, Ursolia. Another question to Elucidate. Do you believe that at some point FinCrime Index will become a must-have for EU regulators?
Sure. I think Siham and I both have our thoughts to share on this. And so one of the things that we've done since our inception, Siham comes from a compliance background, and our CEO and co-founder, Shane, worked in international compliance team setting up their operations from scratch. And I think there is a huge wealth of experience and interaction with regulatory bodies, which has given us the approach that every time we go into a new market or think of new products or solutions or clients, we always talk to the regulatory bodies. We keep them involved. And over the past few years, the conversations are not if there is going to be a demand for a standardization, it's a question of when. And I think events like the FinCEN leak that was reported last week only serve to expedite this way of thinking. And I think this pressing need for a global standard for standardization for assessing fin crime risk. Siam, do you want to add something to this one?
Yes, and I'll add, I love that this question comes from an existing client of ours, so thank you. I definitely think so. I mean, essentially what we're working on right now is cooperation with actually regulators in the EU to provide them with that data-based assessment so that they themselves also can adopt a risk-based approach to supervision. And so we also offer a product that we call SubTech for supervisory technology to regulatory bodies to essentially use data to drive the way in which they oversee institutions in their markets. And so we're talking about essentially applications beyond internal use and beyond correspondent banking relationships, but also essentially to strengthen relationships between regulators and institutions and make supervision more of an ongoing thing rather than something that is sporadic and only driven by occasional visits.
Thank you. The next question, is RBI using Elucidate to expand their portfolio or have more visibility on their current portfolio? A very good question, and I think this is something which I can address or start addressing now from the business side, and maybe my colleague from compliance will add something on that. Yes, for sure. We will, at the first place, use the Elucidate platform, of course, to increase the transparency and kind of cross-check the quality of our existing portfolio. And definitely for any further potential expansion of the portfolio, using the platform will support this in already at onboarding, if possible, assuring the quality we want to have in the correspondent relationships. Urshali, would you like to add something?
No.
Yeah, thank you. The next question, if EFI is used to quantify and price financial crime risk, might it lead to correspondents charging respondents more for access, payment processing, etc.? I think I will address it also from my business side. Yes, it could lead, of course, because I want to have a high quality of my correspondent relationships, and if assuring the high quality is also connected to higher due diligence costs, this will be potentially priced into the terms and conditions. I don't know if my colleagues would like to add something, but yes, it could potentially lead to increased or actually fair pricing of due diligence costs into the business relation. So the next question I have here, where country is the data stored? So in which country apparently is the data stored when data is uploaded? I think this is a question to Elucidate colleagues.
Yeah, absolutely. Happy to take it. As I outlined in the presentation itself, also, your data is stored in a GDPR compliant data processing facility in the EU, in Frankfurt, in Germany, and this facility holds the best-in-class security certifications. We also have a backup facility which also adheres to similar standards, and all the data is stored in an encrypted 256-bit advanced encryption standard format.
Thanks. One more, which is again on blockchain, and now very concrete. Which blockchain are you using?
Sia, you want to take that one?
Yeah, I certainly can. So we use the Ethereum public network. In essence, we have a contract that's deployed in a network, and it allows everyone to verify that our results were put together at a specific time.
All right, I think we've covered the questions. And again, the audience is invited. If you, dear colleagues, have any further questions which may pop up in your mind after our session today, please feel free to address the colleagues from Elucidate or us directly. We'll be happy to respond and support you further. Thank you very much for joining. I hope you gained very useful insights, and of course, hope to see you in any of our webinars following until year end. Thank you very much.
Thank you.
Thank you so much.